The big crypto crash. It was bound to have many victims. Here's one more. It is none other than Vauld. Vauld is a crypto startup that is backed by the likes of Coinbase, the world's largest crypto exchange. It's backed by Peter Thiel's Vauld Ventures as well. And guess what? The founder has announced that Vauld will be stopping all withdrawals, all deposits, and all transactions. In a blog post, which is up on LinkedIn, which is up on Twitter as well, what Vauld says is that it has seen withdrawals of more than $190 million since the 12th of June. That it is having financial difficulties. It's going to be approaching the courts in Singapore for a moratorium of sorts. It's going to be approaching investors as well. Very recently, in January itself, we had seen a big fundraise by Vauld, $25 million. Before stopping all transactions on the platform, Vauld had laid off 30% of its workforce as well. We've all been talking about the crypto meltdown, and here's one big project that is coming crashing down. What does this mean for Web3? What does this mean for all of you that might be investing in cryptos? And what are the clear loopholes that also exist, the lack of regulations? Who's responsible for all the money that has been collected? All of that and more is what I'm going to be discussing with two experts. You see them often here on ET Now. Here's Ajit Khurana as well as Siddharth Sagani. Gentlemen, welcome to ET Now. Thank you so much for giving us time. Siddharth, I'm going to come to you first. Of course, there were going to be casualties. Of course, there were going to be victims. But it's already started. The point is this a house of cards that is going to come crashing down?
Well, hi. Of course, we all anticipated such kind of situations, but I still believe that there is more to come. Looking at the entire financial markets globally, of course, crypto is a very small market. The same situations are also happening in the traditional markets as well. In the S&P, in the US, a few companies have announced major layoffs. They have also announced that they are going to be shutting down some of their verticals as well. I don't want to name the companies, but those news are out already. And in the crypto market, it's no different because of course the liquidity crisis and everything is definitely happening, especially for the exchanges which are focused on India, because India has strict tax guidelines. GST and TDS are now in effect, and because of that, the liquidity and the entire market sentiment is very negative. So of course, the regulations, market sentiment, the global financial situation. This is something which nobody could have anticipated. We are seeing the wars like situation for the first time, a pandemic for the first time, a recession like this for the first time. So it's very, very new. So I think there is more pain to come. Let's see.
More pain to come. This is just maybe the start of it. One gets to hear horrific stories as well, how people have lost so much money, but that's, the pitfall of investments as well that comes in. But Ajit, more pain that's going to come, a house of cards is going to come crashing down, and will the short end of the stick then be held by the smaller investors, the retail investors?
So I think that anybody who is taking a position in this market would be hurt. But the key point to keep in mind is that when a stable coin doesn't remain stable, it is not the investor's fault necessarily. It was a fault of the design of the startup. If lending protocols such as Vauld today, Celsius yesterday, and then a couple of others are not able to honor withdrawals, it is once again the fault of the startup. But if the market as a whole collapses, prices are lost, well, investors also have to keep in mind that they may not necessarily have researched enough and participated in models that can only be sustained in bull markets. And to be honest, I shudder to list any, I don't want to, but there are others, I think, that are still waiting to announce bad news.
Okay, we can debate on how much more bad news, how many people is going to affect, but let's talk about what we do know. And so that is the lack of protection for investors. You do have a situation, at least in India, where you have India's RBI, could not be more vociferous that it is anti-cryptos. We all know that there is a legislation which is in the works that could be flowed in Parliament. But till then, the fact is we do have crypto exchanges. The fact is people are investing in cryptos, or maybe they've stopped right now because of the way the market is performing. You have a tax also now, whether it is TDS or the 30%. Who will protect investors, their deposits, their money? Because now look at Vauld. It says we've hired one law firm in Singapore and one Cyril Amarchand Mangaldas as a legal advisor in India. But who will be the custodian? They are the custodians of money as well. Who's going to look after the investors?
Well, in absence of regulations, all the exchanges are actually self-regulated. Now, when we say self-regulated, they are trying to follow the best KYC as per their understanding. But that's actually a regulator's job to make sure that the compliances are being followed rightly. The custody of the funds are kept in a safe manner. Most of the exchanges in India don't even have systematic custodian facilities. Like, they don't have hardware security modules. They are dependent on small hardware devices where the founders or the top management has the control over funds, and it's not transparent at all. There has to be a third party custodian. Also, when they say self-regulated, one of the leading organizations or associations, they had come out with the compliances, which was the self-regulatory standard, which was actually a half-page document, right? It is not enough. We are a part of GDF as well. We have contributed to a lot of compliances and regulatory standards, even for some of the governments. It is not enough. A self-regulatory or a regulatory compliance standard should be at least a few thousand words, right? Here it was not even 1,000 words. So this is definitely, I would say that regulations have to come in as early as possible. However, as Ajit just mentioned earlier, the structure of the organizations, their business models were dependent on new money coming in, right? If new money is not coming in, the volumes have dropped significantly. Volumes have gone down by 90%, and an exchange always makes money from the brokerage it earns by the number of transactions. Now volumes have gone down, so their incomes are badly hit. Their revenues are definitely is going down, and the burn continues. The staff cost, the maintenance cost, all these things continue. So they are burning out of their pockets. So this will not last. This has to be here. The government should rather come in and support the industry, reduce tax burdens, reduce all these things, so that the industry can survive this bad period. But I don't see this happening very in the near future.
You want the government to step in and protect an industry which we don't even know if the government wants to exist in the first place. But coming back to this very point, Ajit, there is a tax. There's a 1% TDS. There's a 30% crypto tax. You're seeing how exchanges are in India. Volumes are down. But once again, the fundamental question, who will protect the investors? Are the exchanges custodians of investors' money?
Two things. Unlike, let's say, a traditional model, let's say the stock market in India, where there are brokers, dealers on one side, there's an exchange on the other side, and then there is NSDL, CDSL on the third side. In the crypto situation, all three roles are played by the same entity. So to begin with, I think that itself is not the greatest structure. Why they are constrained to do that, speaking from the exchanges side, is that even if it is a loose custody model, as Siddharth talked about, the exchanges feel it is better that we have a loose custody model than give it to an external custodian who also has a loose custody model, because that custodian also is not governed by regulations. So I completely agree. Today, the likes of lending protocols, including the one that you announced at the beginning of the program, can hide behind the fact that in their terms of service, they may have mentioned such an eventuality, because they are not denying withdrawals. They are saying we are pausing it for the time being because of liquidity situations. But I don't think that is enough. I don't think that is enough. While consumers must necessarily do their own research and know what they're getting into, no denying that. At the same time, there are certain minimum expectations of behavior and performance that the customers can also have. Especially the small investor who is not supposed to have a research house or read all the fine print necessarily at all point of time. So somebody's got to do it. Who is that going to be? Ideally, some form of regulation. It does not have to be a bill or act as India is proposing. It can be self-regulated. Incidentally, Siddharth, when that half-pager code of conduct, it was going to be called self-regulation, it was replaced by code of conduct, was drafted. I was on all the calls leading up to it. And the reason you saw such a minimal or light code of conduct is because they had to have 100% consensus. When government comes in, 100% consensus is not necessarily required. So I think that, Nayantara, you rightly said that whether the government wants to support it or not is not even known. I think let us find out, let us know it, and then move in the direction whichever is chosen, but decisively.
Because the fear also is that, which is the way we are seeing the world in a risk-off mode when it comes to risk-on mode. We will see maybe more casualties, more victims, and people are losing their hard-earned money. They're losing their houses. They're losing whatever they may have had in fixed deposits or the equity markets or in gold, in cryptos, and there is just no protection for them.
Well, it's not just crypto. It's also in the traditional markets as well. If you see the US markets or maybe anywhere, the fuel prices are going up. It's going to be bad. I mean, it's not just crypto. A crypto is a very, very small market. It's not even $1 trillion now, whereas the world economic size is over 100 trillion. So the impact in the traditional market is going to be much, much higher.
We've seen a market cap of the crypto world fall from $3 trillion to under $1 trillion. I don't know how you're saying that.
But it's still very small when you see the global markets, right? It's still very small. S&P is expected
but there are regulations. But there are regulations
in spite of being a regulated market, the impact is so bad.
Yes, but there is no stock exchange which has stopped you from withdrawing money. And with that, Ajit, that's what I want to come to now. It's saying there's been a run on Vault, $190 million plus kind of withdrawals. So it has had to suspend all operations, deposits, withdrawals, all of it. Now, what we don't know is, even if Vault were to find a white knight, even if Vault was supposed to find some way out, how will people who are still stuck get their money out? There's no waterfall system here. There is no insolvency bankruptcy code here, or is that at play?
So what is interesting, Nayantara, is that if I may just combine the response to this question with the previous one, that do consumers have any recourse at all? The answer is the consumers have a lot of recourse, and none of that requires the coming of some crypto regulations or bill. If the exchange has defrauded them, right from the Consumer Protection Act to the Criminal Procedure Code can be applied to them, because that does not require some sort of listed activity or approved activity. You can always file a criminal case against somebody if you feel they have defrauded. If business has not been going well and hence token prices have fallen, I think that could be taken in the general spirit of business because of bad markets. Specifically in the case of the insolvency, etc., I think that we are experiencing two very different things at the same time, but on the surface they appear the same. One is that several protocols, and I hope that is what we heard in the case of Vault, have some part invested or blocked away in very liquid investments, which they have been able to support withdrawals with, and some parts in somewhat illiquid, which may take time. If that is the case, then there'll be some pain of waiting, but the investors should get their money back. In some other cases, they might have taken a speculative point of view with some part of their portfolio, which means they may even in the future not be able to support withdrawal if the market prices do not rise. And that is completely unacceptable. I would say even if they have listed it in their terms of service, it continues to be unacceptable because the indication was that they would give a certain return. In such a case, if their terms of service specifically do not mention this or their program guidelines do not mention this, you don't need regulations to go after anybody. You can go after them based on the documents they entered into at the time of the contract.
Okay, but once again, when there is a run on, and we have seen with Vault, so once again I ask you, Jeet, in case there's a white knight, in case a solution is found, in case some buyer comes, Peter Thiel comes to the rescue, his PayPal founder whom put money in, I don't know, in case there is, who will decide the waterfall? Because we're in uncharted territory here, right? Who will decide, okay, this investor will get money first and before this person?
So the thing is that,
or it's a complete write-off.
They are actually using the word investor to mean investors in the equity of their company. So we are not talking of them, but investors into their program. So I call them depositors really. All depositors naturally have to be treated equally. But the important thing about the white knight bit is, if a lot of the assets of Vault and other such companies are stuck in somewhat illiquid situations, which they are not able to liquidate as rapidly as customer withdrawals are mandating, if there is a white knight situation, the white knight would give them an advance and take charge over these relatively illiquid assets. That is the way forward. And if that happens, then they could, of course, get their pound of flesh, either in terms of stake in the company or some sort of an extraordinary return on investment. And this could be used to service the customers. My feeling is that we do not know. And this is another problem, that transparency in terms of telling us what has happened, right? Does the company not have money? Like a run on the bank kind of situation actually occurs when the bank has extended far more loan than it can service liquidity with, but the loans are still there. Is that the situation they are having? Did they involve in capital assets which have now depreciated beyond, as in fallen so far low that they can't service? I think that we would also like to know that information.
Siddharth, what's your sense? What will happen to depositors?
I think the investors and the management should come together and decide something on this. But however, I'm uncertain on how the entire waterfall would take effect. Whenever there is an opportunity, the withdrawals and deposits are starting again, I would advise to move the funds out and wait. I mean, of course, it will not go through at once, I believe, but how much ever they are allowing, you should move it and keep it in a non-custodial wallet, which is a hardware wallet or a wallet which you set up by creating your own mnemonic phrase. There is a very known phrase in the crypto space: "Not your keys, not your coins." And right now is a very relevant situation where we are witnessing all this, right? So keeping funds on exchanges, not just Vault, but maybe any other exchanges, even the top exchanges, will face liquidity issues. Some of them are already facing liquidity issues. So keeping the funds in your own non-custodial wallet is the best.
Okay, so that seems to be the advice. Keep your money in a non-custodial wallet. With that, gentlemen, I'd like to thank both of you for taking the time out and for breaking it down for all of our viewers right here on ET Now.
Thank you.